Welcome back to week 4 of the UK Property Stats Show with an absolutely fantastic guest this week. I don't know how we're going to top this, but what we've just got here is the main man himself, Ben Madden, who used to own an estate agency chain in London, sold it for the monies, and now set up his own Fine & Country Fine & Country estate agency brand in West London. Very well thought of in the industry. Welcome, Ben, to the UK Prop Stats Show as our second guest. Great to have you on board, mate.
Thank you. It's a pleasure to be here. You do well with your hyped up intros. So I've got to get my wife watching this and get her on the same page as you, I think. But yeah, thanks. Good to be here. Looking forward to it. Good
stuff. Right then. Right, so boys and girls, this show looks at the stats of what's happening in the UK property market and regionally, so you can judge yourself where you are. There's a lot of doom mongers out there saying it's the end of the world. It is hard work out there, and Ben is going to add his point of view because, as I said, he not only does he run a great estate agency in West London, but a lot of estate agents use him as a mentor and guide. He is big in the game. You know, how big? Big in the game when it comes to Fine & Country.
Wow.
Right.
Wow.
Tell you what, give me a fiver later, mate. Right then. Okay, let's deep dive in and let's rock and roll. And you should be able to see the screen. And with the first slide of the week, and we're going to rattle through these. So the first thing we do is we always start with new instructions or listings. And we look at this week, we're on week 4. So in terms of week 4, let's just pull up the calendar, fill the gap, fill the blank spaces. Ben, while I just find out, too late.
Listen, the first thing that screams to me here is I need a time machine. I need to be back in week 4, 2016, because what on earth, 47,000 units in a single week, 2016. Look at every year since. How bad are we at remembering how good life was? We always remember that there's a doom and the gloom, and I would love to go back to that moment in time and say to my team, you guys don't know how good you got it right now. But
it was a blip. I mean, in week 5 in 2016, it was 43,000, but you did settle down to 35, interestingly. But as you can quite clearly see here, and as I said, this is week 4. So in terms of 2023, week 4 was Monday, the 23rd of January through to Sunday, the 29th. Always got to be a few days out of date, simply because it takes a few days for the stats to come through. All the stats have been provided by 20EA. They don't pay for the data to be on this show. They just give me the data free of charge. Using their insights platform. It is available for estate agents. Do check it out, but don't mention my name because I don't get paid commission.
And they probably don't even know who you are at 20AA. It's not like you ever talk about them. Of course you don't mention.
No, of course no. What I will say, Ben, is that we are creating such a stir in the prop stat community that I'm getting another set of prop stats coming on in a few weeks' time. So when we get you back in a month or so's time, I tell you what, mate, it's going to be stat heaven because we're right. Right. So that's telling me that listings are not bad this week, but compared to week 4. But let's just have a quick look at how that compares to the running 4-week average for the month. So now this is January. So the average number of listings in the last 4 weeks per week, 26,000. This week, 32. Thoughts on this one?
Well, yeah, I mean, it's a nice increase. I mean, the last few weeks watching the show, this data, the 4-week rolling, when you consider the Christmas period, it's a little bit like the start of the Premier League. And years ago, teams like Arsenal would find themselves at the top of the Premier League after 3 or 4 weeks, and it'd be laughable. Obviously, I can't say that now because they're doing reasonably well. Okay. But now we've got, I think, a 4-week rolling average, which actually means something. And if we are above 4 weeks of genuine, true, new to market data, then I think this is a good sign. I think it's probably what most people watching this want to see, an increase in instructions. What's that, roughly 20%? That's good, I think, personally.
Okay, let's now move on and talk about the average price that those properties are coming on the market at. Now, at the moment, this month, it is at 409. Last week, it was 399, and the week before was 420. And we're going to have a look at what stuff is actually selling at. But again, when you consider, what's your thoughts on this one? I mean, house prices are not going up that much. So is bigger houses coming on the market, overvaluing, or all of the above?
Well, look, it's going to be all of the above, isn't it? There are, I think, bigger properties coming to the market. I think there probably has been a realization from some of those potential downsizers that have been through arguably what would have been the toughest winter in home ownership for them because of the cost of, the cost of living crisis, gas bills, everything going through the roof. And so, yeah, this is anecdotal, but there's the very real possibility that lots of people are thinking we don't need this extra second, third, fourth bedroom. Let's downsize. They're coming to the market. I've got no proof. I'm just thinking sentiment. I'm thinking sort of logically. I'm thinking anecdotally, conversations we're having. That makes sense to me that those bigger properties would enter the market right now. And of course, the other thing around that is if you're a consumer and you think the market has peaked and you are in one of those large properties and you are a downsizer and you want to maximize your return, then I sell now because it might take a few years for me to get the best value for my home if the market's peaked. So let's go to market right now because I don't want to go through another property cycle because I want to give my money to my children or my grandchildren. I want to set them up for life. So I think there's a few reasons why we could be seeing the higher price point. And of course, the consumer works on a lag. We know that. They're not as familiar with what's going on at the coalface as us, and they still believe possibly that prices are doing something different to what they are.
Good stuff. Good stuff. Well, in last week's show, week 3, check it out on YouTube. And we'll put a link at the end on YouTube where you can look at the playlist. We actually showed a graph that proved that the more bigger houses are coming on the market than smaller ones. And interestingly, though, the stuff that's selling is at the lower end. Right, let's move on to price changes. And price changes up to 16,000, which, if you think about it, agents working their stock. Last week it was 16,000. The week before 16,000. What's your thoughts on this one?
Well, I mean, it's difficult. It's anecdotal. We've been through a funny old period, haven't we? The last 16 weeks, almost 20 years in a estate agency. You probably ever so slightly longer than me. What an interesting period Q4 was. What that did to consumer sentiment, what that did to the mental health of estate agents that went through this crazy 2 years, slightly slower summer, trust gets involved, the world is collapsing around us. And so, as I said, the consumer works on a lag. And so anyone coming to market, I would imagine around September time, still felt like they were in a positive zone pricing wise. They've run through maybe with an initial agency, maybe they run through their initial sole agency period. They're thinking about a second agent. There's still some optimism, some positivity. In the new year, things are going to go well. It's going to bounce back. And yeah, there has been an increase in activity. I think the start of the year has been really positive. But if properties aren't selling and you've been on the market for 3 months before Christmas, within a couple of weeks, you need to get very, very real and you need to adjust your price. And by the looks of the data, 3 weeks in a row of 16,000 price adjustments, people are getting real. They are making that change and those difficult conversations are being had.
Well, interestingly, later in the show, we've got a new feature, Ben, which we actually break this down regionally. So hang in there because I'll tell you what, the regional differences are something to behold. Right, let's look at the price changes. As you can see here, like I indicated, 13,000 in week 1, 16, 16, and now 16 this week. There's not that much difference in terms of agents working their stock. Very interestingly, not in this show, but we've now got the national stats of the level of stock every single month going back to 2016. So we can actually now reference the difference between price changes, the percentage of price changes versus stock. That's interesting. Okay, let's now move on and talk about the price of the property that is being changed. Last week, what was it last week? The average price changed this week was 388. Last week it was 394. The bigger properties seem to be coming down in price a bit more. Thoughts?
I'm not 100%. I'm the village idiot, but just so I understand, this figure 388 is the original price, and they're reducing to 388. This
is the original asking price of the properties that were reduced, but we don't know what the reduction is.
Okay, fine.
Okay. Again, I think it's not one of the most important stats, but I think it's important to see. Should we move on and look at solds?
Mm-hmm. Let's do it.
Okay, good stuff. So number of solds, 21,000 properties sold last week, also 21,000. I mean, okay, I must admit, I'm not, the 2016 figure, I think was a blip. Okay. And looking at the 2016 stats, it does look like a blip, but I've included it in there. But if we took that out, that's a pretty stable market, in my opinion.
Yeah, I mean, it's it's the start of
For the week, for the
I
time
think
of
it's
year.
really important to remember, you know, some agents are reasonably new to the industry. They've experienced the last few years and they think maybe that's life as normal. And, you know, I think it's important that something like this show, you in particular, other people who are able to reach a wide audience, educate appropriately. 2016 to, for me, 2016 to the beginning of 2020, I call those the Brexit years. And so the market was more traditional in its ebbs and its flows, and there was seasonality around the market, but it was, you know, it was just an okay market. If you think 2014, 2015, where we had the peak, maybe 2016 as that's coming out of the peak. I can't remember the exact date for the Brexit vote announcement, but look, what I would say is most businesses were reasonably comfortable, I believe. Of course, not everybody. Some had great 2017, 2018, 2019, some not so much. But I think they were reasonably comfortable in those years with their activity levels. And if that's what we're seeing this year, then, you know, I mentioned mental health earlier on. People get worried, they get in their head, they read too much into some of the headlines. If you had a 2017 year, a 2018 year, would you be happy? I think most businesses would. And so that looks good to me. That looks, I'm comfortable with that. And I think other our sort of colleagues around the country should be too.
I think that I find with the state agencies is that they always look at the previous year and don't look at the big long-term picture. Have more of a helicopter view. Right, let's move on and see what other wonderful stats we've got on this one. The running average, hold on a second, you just need to move that little bar over there. There we go. So again, sales on a running 4 week, again from a slow start, because the first week is always a bit slow. I think the power of this particular slide, the running 4 week one, will come into its own as we go throughout the year. But I think it's important. Okay, let's look at the average asking price of the properties that are selling. And this is the one that I've been slightly concerned on for the last 4 weeks. So let's just say, so the average price of the property selling and the number of properties that have sold this week, as we said, was 21,600. The average asking price of the ones that sold, 346. Let's look at what's coming on the market. 409.
Okay.
That concerns me.
So I guess maybe when we look at the regional data, we'll be able to dig into that a little bit more. You know, which regions are showing the higher volume of instructions coming to market? Again, anecdotally, London hasn't been the crazy party atmosphere that maybe post-COVID presented in more rural areas of the country. So maybe London is coming to life again. Maybe more properties are coming to market. Those properties coming to market because of their price point could distort some of the data there, I think. And they are less likely to sell quickly because of the high price point. We know there are less buyers at that higher price point. So you wouldn't expect the listing to sale ratio in London necessarily to be the same as some other areas. You know, for somebody from Wales recently, their listing to under offer ratio is just exceptional. And it's not like for like, because that's not the market norms in London. So I think there might be a bit of that going on.
I tell you what, there might be an opportunity. I've just come up with a Chris Watkin idea. We could actually do a weekly stat on the percentage difference between the asking price and the listing price. There you go. So you are the gift that keeps giving. Let's move on and look at sales that fell through nationally. We're on 488 this week, compared to 5.2 last week and compared to 5.3 last week. We're going to talk about percentages in a second. But again, thoughts on that?
Listen, I don't want to be a broken record here, but take me back to 2016. Look how much business was being done and how few were falling through. Well, we have all got to smell the roses when they are here. And you know what? The last 2 years, there should have been a lot of rose smelling. And I don't think we can complain about where we are right now. 488, what was the under offer properties this year? Sorry, that in week 4 was how many? What percentage are we looking at as an aborted rate?
The abortive rate, we're going to come on and look at this, but the abortive rate, net sales that fell through, we're running on 22.5 this week.
Okay.
We are going to come on and talk at that in a second.
Sorry, jumping the gun.
You are, never mind. So this is our running 4 week average. Again, it's going to come into its own when later in the year. Let's look at, I tell you what, net sales is where it's at. I'm a huge, massive believer in net sales. Now, do remember in 2016, we had that blip on the sales. Again, looking at the data, because I'm a bit of a stat geek, I've got spreadsheets galore. And I've just got a sneaky feeling that week were basically someone didn't press the button and they put it onto the next week's afterwards. So let's just take 2016 with a pincette of salt. Okay. So I'm gonna put my hand over that. I know you can't see it on screen, but I tell you what, let's just ignore 16.
Okay.
Okay. Again, if you're comparing yourself to 21, 22, it's not the same, is it? But it's
I mean, the conditions are not the same. I mean, I'm afraid it's almost ridiculous to compare yourself to 21 and 22. And actually, I don't think it's appropriate to compare yourself to 2020. Everyone remembers in December 19, we got a majority government, and the so-called Boris bounce presented itself in January and February. So that January 2020 figure is off the back of, a strange period. Yeah, sure. I mean, on 17, 18 and 19, we're down. But of course we are, because we've just had 3 years of increased transaction volumes. The highs and the lows, the ebbs and the flows. I think it's completely reasonable for us to be where we are, given the last few years of reasonably intense activity we've had.
I tell you what, you listen to them doomongers and the Telegraph, and you would have expected something to be in single figures on the thousands, wouldn't you? Now,
well, I'm afraid the people that shout the loudest about problems, 25% price reductions, the world is about to end, they're looking for their 5 minutes in the media, he says, sitting on a podcast with Chris Watkin. But they are I'm afraid our job as people that have worked in this business for a long enough time is to educate the people that are unsure, be that the consumer or be that our estate agency colleagues. I think it's just as important that estate agents help each other through this period, understand what's going to happen, because prophecies can be self-fulfilling. And I think we need to present effective, honest, transparent data. And if we do that, then it's very clear that it's not the end of the world.
I mean, people say, will there be a house price crash? And a house price crash does conjure up big events. And the two previous ones in 88 was with dual Miras tax relief. We had 08 with the credit crunch. I just think there's more normality and balance in the property market now. There's a little less buyers. People aren't paying the stupid prices. And if people aren't paying the stupid prices, then the price that's being paid is coming down. So you can either dress that up as a price crash, or you can actually say there's a bit more normality. I mean, I'm of the opinion that a massive driver behind these doomongers is landlords and home buyers waiting for waiting for this house price crash, is that they fear they've missed the boat. And therefore they are almost saying they're wanting a price crash so it can reduce the price. When in reality, when you do get a house price crash, it does actually cock things up for everyone. So let's not start hoping there's a price crash, because it won't bring anything good. But then, should estate agents worry if house prices drop, Ben?
No, I don't think they should worry. I don't think that's the appropriate language. I think we need to be conscious that prices are going to drop. I think we need to be conscious that, that was far too, I don't know for certain that prices can drop. I think to be conscious that they may drop is probably the right language. I think we need to be educating the consumer. I think, presentations like this on a macro level, which is what we're looking at here, we're looking at macro data. For me, this is not the stuff that makes you an expert in your local market, but this is the sort of stuff that builds trust. When you're sitting around the coffee table, we're sitting down the dinner table, and you're presenting to the consumer and what's going on. Don't forget, the consumer, what they want to know is what's happening in the market right now. They don't want to hire a historian. They don't want to hear what happened last year. You're not there to tell them what the market was like 6 months ago. They need to know exactly what's going on in the market right now. We have a really simple system that we think makes effective communication. And the estate agency is built around professionalism, which leads to trust, which leads to rapport, which then leads to some sort of scarcity or urgency. That's effective agency for us. For me, this is the trust piece. If I can talk at a macro level about what's going on in the market, how it impacts the market, and what it might do to impact the future saleability of your property around pricing, and then give you very specific in the moment what's happening in your market locally right now, the consumer will go with you. They will listen to you. They'll be educated by you. Go on, Chris.
All these stats are on 20 EA Insights. There you go.
20 EA, is it? Okay, yeah.
There you go. Not that I keep banging on about it. Other property stat platforms are available. I am not being paid, although plenty of people have asked if I have. I am not. And we are getting some more data. You're absolutely
my check's in the post though, right?
I'm sure it is. I'm sure it is. Yeah. Okay. Yeah. Joe, can you get the fiver? No, get £5 coins of sellotape into a post-it note.
Yeah, hurry up, Joe. Come on, mate.
Come on, right then. Okay, then. Right then. Okay, so fall throughs as a sale. Oh, hello. Fall throughs as a percentage of sales. We're at 22% last week. Last year at 18. Again, so and again, I would expect that.
What, Chris? Let me ask you a question. Do you know, on average, how many sales an agent over a period of 12 months would expect to, I don't know, place under offer, exchange, and complete on? How many consumers would they serve? Do you know that average figure?
It's about 33%.
So we're in quite strong position then right now, right? So, let's just say, for argument's sake, I don't know, I mean, let's just use silly numbers. If a branch, because it's easy for me, if a branch does 10 sales a month and they're at 120 a year, the difference is between 18% last year, when it was astonishing because everyone wanted to buy everything, and 22 where we are now. This is definitely not a stat to be worried about. It may look higher than previous years, but it's still running at I think a very positive level.
Right, I'm just going to just pull up. Okay, the national figure. Oh, right. Okay, right. Hold on. Hold the news. I've got the national figure for 2022. Okay.
Exciting stuff. I mean, you're building this one up.
28.76 for the okay. Interesting. Yeah, very interesting. Right. Okay, we'll take that back. Let's move on. Time is swiftly moving on. Again, the this week rolling average 22.5. So again, showing you that we're a bit behind right. Let's just keep cracking on. Price changes as a percentage of listings. Again, showing people that are actually working their stock, aren't they?
Yeah, I mean, back to what I said at the start, really. Are they working their stock? Are they working with consumers that sort of had their heart broken in Q4 last year and they thought there's a bounce back ability in January? And actually, in January, the market is stronger, but the pricing is maybe not at the same level. I think there's probably a bit of that seeping in.
Okay, and just finally, before we move on to the regional stats, net sales as a percentage of listings, again at 53, which again, compared to the rest, is pretty stable market.
Yeah, I mean, I think so. In our business, which I appreciate is fine in country, it's sort of premium price point properties in London. But if you sell, one for every two you list, that's a good ratio for us. But
okay,
I appreciate this
it is in London, but out of London, it's more than that. But well, come on, right. This is a new feature, which is the regional stats. Okay, so what we've got here is just gross sales as percentage of listings. And at the top, we've got the national figures. At the top, it says 23. That's and column 1 is week 1. Column 2 is week 2. Column 3, 3. And this week is column 4. So at the moment, the gross sales is 69.15. We've got a reference of the national figures below that, but then we get into the green and the red, and we look at what's happening regionally. And you can quite clearly see that London is a tough market. And if you notice, as you leave the metropolitan, I know you guys in London think the world stops at the M25. Trust me, it doesn't. It is quite interesting how things are moving up, that as you go out and further out to the lower price, higher volume areas, that the market seems to be performing better. Any thoughts on this? And look at the trends. It all seems to be the same.
Yeah, I mean, I would say that this is what I regard as, or certainly the last couple of years, as market norms. What we're seeing right now is a continuation of what we've probably seen over the last few years. London, there was the mass exodus, everyone's on the hunt for more space. They've got this romantic view that them and their partner will move to a rural area of the country and work from home, and they won't miss all their friends. And, that meant that immediately after lockdown 1, London was a tricky place to do business. I've been in lots of different meetings with fine country representatives up and down the country. And this is indicative of what we expect. In London, you expect to list more properties and sell less. Whereas the success rate, as I mentioned, Wales earlier on, the business I was with in Wales not so long ago, absolutely amazing, their success rate. So, I don't think this will come as a shock to anyone in their particular area. It may come as a shock to someone in the Northwest who's a rock star looking at London and thinking, you guys, what's happening down there? But in London, I think this is a given.
Interesting notice that inner London has actually grown by 50%, from 31% in the first week to 44%. And again, this is going to be better as we go through the weeks to build up a picture. Whilst outer London seems pretty stagnant between 51 and 57, everyone else does seem to be growing, doesn't it? But again, the colours, the red, green is the best. red is the worst. Scotland does have a particular strange system where they only class sold contract when it's almost, legally completed, I believe. So you've got to take Scotland with a slight pinch of salt, but it's interesting that. Let's move on and look at percentage of sales that fell through. The national average at the moment is 22.59. But there are some interesting stats there. Outer London, but again at 26, but again 26 on a national of 22. It's not bad actually. The gap isn't so wide on the fall throughs, is there?
No, I mean it looks to me week one, bit of a horror show. People come back out of Christmas, they've changed their mind, they're moving on, they don't want to do what they wanted to do, they're separating, they're maybe moving in with somebody else that they didn't think they were. So week one looks tough, but I think as the month has gone on, okay, Outer London is worsened, but right now looking at week 4 snapshot, I think most regions would be pretty happy with that actually. Most businesses.
Outer London hasn't got. It's got better. It just simply is. It's the worst stat out of it.
Oh, sorry. Of course it has. Yeah.
Okay. So again, those that you're watching, have a look at that. Let's just have a quick zoom in so you can have a look at this loveliness. Right. Zoom out too much. You don't want too much here. Right. Okay. Price changes as percentage of listings. So we're on at 51.58, top right hand corner. But interestingly, we've got the Scots. The Scots don't seem to be doing very well on their price reductions, although they are selling them. But the Southeast agents really working their stock there, aren't they?
Yeah, I mean, again, I think it comes back to the position we find ourselves in. If properties are not selling, if it is, for argument's sake, you sell 1 out of 2, that means 50% of your stock is going to need to do something. And there's only so much you can do around launch strategy, marketing and exposure. At some point, there's a realization that if people aren't buying or offering, we need to do something on pricing. And so fair play to those agents that are. I know there are lots and lots of people that will be watching this and saying, well, just get the price right the first time round. But if you look at the success rates and, to talk about my area of the world in terms of competition and how agents operate, there is unfortunately, it's almost a market norm in this area. I was in a meeting probably about 9 months ago with one of the best agents in the country based in Leamington Spa. And his view is that you take a listing on and you sell it. You take one on and you sell it. And all of his agents operate on that mantra. And I was in this meeting, there were some other London agents. And the ratio for some of them was take 5 on, sell 1, take 6 on, sell 1. So it's different in different areas. And for me, I wouldn't be judgmental around it. It would be amazing if every agent was trained to the level and had the professional integrity and believed in the right level of research to get the pricing right. Sometimes, everybody makes mistakes, but also agents have a bit of a rep, don't they, for overpricing and doing what they need to. And when the competition is higher, I think that probably creeps in a little bit more.
Interesting. I've been doing some research on some inner London agents, and there are, out of the big 5 agents, there are a few that overvalue, and you can see they're overvaluing, but don't sell them. But there's other agents that actually, the best performing agent overvalues the most, but actually works the stock and then sells them. Whilst there's another agent who does overvalue, but only sells a quarter of their stock, whilst the other one sells nearly 6 out of 10. Absolutely fantastic when you look at the stats. Just quickly, let's look at the net stats as a percentage of listings. Again, we would expect inner London to be at a low figure, but you can again, these stats are going to level themselves out, but we'll, as time goes on. But we'll just leave that on the screen for anyone just to see, so you can compare yourself against the competitors. Okay, let's move on and talk about some extra fluffy bits at the end. How many days did it take to sell a house in 2022? And we've got on the maps there. Now, London, it is taking longer to sell a house, okay? Interestingly, the average in London in 2022 was between 70 and 90 days, okay? So that's a nice little graphic, which is pleasing on the eye, okay? And then you actually now drill down to postcode level. So this is the south of London, south coast. I have been publishing this on social media, so do check out my LinkedIn and you'll see different areas. You can see how different areas work. But you can see green 32 and over in London, that is in the 70s and 80s, okay? Let us, before we always like to focus on a town. So before I'm going to hit you with the big bombshell, which you say is not a bombshell, but I think to a lot of agents it is. We're going to save the very best.
I can't wait. Let's get into it. I can't wait.
What, do you want me to do the bombshell now?
Well, no, I mean, look, I think you're probably right. Let's finish on the bombshell, because hopefully we can have a real good Barney over it, and that's a nice way to finish.
Right then. Okay then. So each week we ask the boys and girls out there in estate agency land, give us the town and we'll look at you. Now, we're not mentioning any names of any agents, but today we are looking at Brighton and Hove, and we are looking at the BN1, BN2 and BN3 postcodes, which is sunny Brighton and Hove. Okay, so as we can quite clearly see here on the screen, you can see on the screen that in terms of market share, the number one leader is for residential sales is Fox & Sons. So we'll have a quick look at Fox & Sons. So we'll just click on that and it should, where we go, is that, why is that not working? Okay, should be, oh, do you know, it's because I've left it too open. So keep talking.
Technical errors.
Oh, come on.
I mean, I'm pretty sure I put in my contract that if anything like this comes up, you know, we're going to have to talk terms.
Okay then, Joe, put another £2 coin on it.
£2 in error. Okay.
All right. Okay then. So I'm going to have to just look at. I'm just going to have to look at the screens. Okay. So this is the number of sole subject to contracts. Let's just look at this graph here on the left hand side. So the greeny blue is 21, the black is 22 and 23. The number of sales in Brighton.
Chris, yes? We can't see what you're talking about.
Hold on a second. Sharing is paused. Good job.
Wow.
Good job. You're here, isn't it? Hold on.
That's another £2.
Okay then. Right. Is that better?
Go. We're on. You're on.
Fantastic. Right. So this is sole subject to contracts in BN 1, 2 and 3. And you can quite clearly see that in terms of the number one agent is Brand Vaughan at 8.5. That little lump up there is because it's the 1st of February, so it is going to, that will level itself down. But as you can quite clearly see that the and again I should have done this live, but you've got on here, you've got the market share for residential sales throughout the month. And if you click on these, it shows you what's happening. Nice spread of properties for sale here. Let's now move on and look at stock levels. Okay, so in the I don't know who's the, let's just have a quick look. Who is this one here? Do you know? Here we are. So Fox & Sons, as you can see, she's the top line. They've been losing market share throughout the year, which is the red line here. Yeah. And also Brand Vaughan, they've also been losing market share for residential sales from an average of around, you know, a few in 21 they were up at 8.1 and they're slowly dropping. Let's just have a quick look. Mission McKay, 6, and they've been dropping down. Again, some of the bigger agents seem to be dropping there. Again, we're going to come on and look about a bit more stats there. Again, I'm just going to keep talking, Ben, unless you want to jump in.
Yeah, I mean, well, it's interesting as market sentiment changes, as conditions change, as less volume enters the market. I do wonder whether the smaller agents will pick up market share because the consumer, I think, this sounds horrible, sweeping statement. 2022, anyone can sell my home. 2021, anyone can sell my home. I'm going to go for a big brand. I'm not too worried about the service level. I just want them to get it on the market and get it sold. If I've been on the market with one of the big boys and it hasn't happened, maybe I need to interact with a local independent. Maybe I need a business where the owner or the director or an equity partner is in the room, because we know in this industry that those smaller businesses with equity partners or directors in the room look at better conversion rates. They treat the businesses ever so slightly differently, whereas the bigger brands will struggle to compete with that. So I wonder if there's a little bit of that going on as market sentiment changes and your independents are able to present themselves as a solution that maybe a larger business cannot be. Interesting.
Just have a quick look at here. So the red is the number of stock that was for sale, which we ended up on the end of the month in January, and we ended up with an average of 2657 in Jan, which was a hell of a lot more than 1838 in last year. Obviously in 2021 3000. That's quite interesting. Normally,
I think you know what I think is really interesting about this is that the data is only going to show you so much. So how many sales in the last 2 years have been sort of discrete off market away from the portals, and so that figure of 1800 in 2022 probably isn't a true reflection of how many properties were available in that market. But irrespective, the number for 2023 looks really positive.
Okay, let's move on and now look at this screen, which is the competitive new instruction landscape. and this basically says in the last year, let's look across the top, that Brand Vaughan have put on 570 properties and they've got a market share of 6.9. In the last 12 months, they've sold 443 properties. But this is the magic one. This is the stat I absolutely love to bits. In the last 12 months, for all of the properties that they've put onto the market, everyone looks at the top of the funnel, don't they? Sold subject to contract conversion rates. Okay. What I love is this. I want you to just look at exchanged and withdrawn. Those are the two columns I want you to look at. I know there's a number and a percentage, but the simple fact is this, is that it's not what goes in at the top. Obviously, you need to have them in at the top. It's what comes out the end. Okay. And a property either exchanges or withdraws. Now, if I know if a sale falls through, it's still in your system, in your ecosphere, so it goes back in at the top. This is the bit that cut the exhaust. And so for every 100 houses that Brand Vaughan put on the market, they have exchanged contracts on 75.79, but Fox & Sons, 59.
Yeah, I mean, Brand Vaughan, I'm not familiar with the business, but that exchange rate, I think, is absolutely exceptional. I mean, that's a really brilliant business that you can get to that volume of new instructions and maintain such a high level of exchange. The service level's not dropped off. The quality of their work clearly hasn't. I think that, looking purely at this data, what a brilliant looking business that is.
As you can see at the bottom, it's the average for Brighton and Hove is 65.26. So therefore, Fox & Sons, if I was up against Fox & Sons, and this is nothing against Fox & Sons, but boys and girls at Fox & Sons probably need to pull your socks up a bit, is that your guys at Brand Vaughan have a chance of probably, I would guess I'm top of my head there, probably about early 20% more chance of getting someone sold. Okay. Mission McKay and Cubitt West and Sawyer & Co. are pretty good at the late 60s. So again, something that's just, I don't know whether Fox & Sons are independent or whether they're part of the corporates. I'm not sure.
They are, I think they're Spicer, aren't they?
Are they?
Spicer Hart.
Okay.
Yeah. So, I mean, looking at price changes, Fox & Sons are nearly 44%, 248 of their 564 listings. That for me is, I think, based on the last 12 months, that's a bit of an issue. That's the stat that I look at and think possibly there's a reason why your exchanges are not high enough, because you're going to market at prices that are not correct. And maybe your consumer is walking away from you and considering another agent who's maybe pricing correctly.
Well, it's interesting. It's interesting that you say that. Let's have a look. This is the next one, which is the Omni valuations and price achieved. So Brand Vaughan put on 570 properties. Now, what's happened is that 20EA have gone and done a AVM, or as I like to call it, a Valpal figure on every one of those properties. Okay, other AVMs are available, and then they've compared that with what the asking price is. So therefore, Brand Vaughan have put their properties on at 2.4% above what they think the property's worth. Okay, Fox & Sons have put on at 2.14 and Mission McKay at 3.9. So basically that column that says original price overvalued is the ones that are obviously overvaluing in the top 10 has got to be Mission McKay at 3.9. Yeah,
that's really interesting. Go back one tab. Let me just the previous tab. So Mission McKay at 3.9 and Fox & Sons at 2.14. But then if we look at price adjustments, Fox & Sons clearly more price adjustments. Yes. Exchange rate of 59 versus Mission McKay 68%. So I wonder if that means, if you look at those two businesses side by side, Mission McKay, would they have better skilled salespeople in terms of getting things over the line, getting things through? That's sort of what it looks like to me there. Really difficult to say though. There are so many things that could be going on in the background, and we just look at these raw data figures.
Okay. So next, the next column, price achieved, could be best described as is the get agent figure. Okay, so that's the difference between the original asking price and the price achieved. So whilst Brand Vaughan were putting stuff on the market 2.4% over the value, they were actually then achieving 2.3% over the original asking, because people were going over the asking price, weren't they? Yeah.
Interesting.
Yeah. So therefore, then you go look at Fox & Sons, they were getting just slightly below the asking price. So both are overvaluing, but one seems to be getting closer to the over the asking price, one at the asking price. Mission McKay overvaluing by 3.9, but then 1.3. So what you then do is this. You can say, well, there's lots of percentages there. So let's just look at the next columns. Average listing price. The bottom line is this. The average listing price, if everyone put a £550,000 house on, what would it sell for? And you can quite clearly see, let's ignore HomeWise at the end, Spencer Lee at 566, Mission Welton at 568, Oakley at 552, Lexton's at 585. There's some numbers here. Now, boys and girls, you've got to be very, if you want to use these stats, you have to go and get 20 EA's platform insights and use it. You cannot use the stats from this. I will not be held responsible for the stats. You must get your own stats and have an arrangement with 20 EA if you want to use these stats. You've got to be very, very careful because the ASA are very clear on the way that you market these figures. Okay. Finally, just before we crack on, how long does it take to sell a house? And you can quite clearly see that some agents take much longer to sell a house than others. So the red is, so Spencer and Lee, new instruction to sole subject to contract 33 days, Mission Mackay 47, Sawyer 35, Brandvaughan 59. So Brandon Vaughan do take, on average, we'll just go there, 184 days to get a property through, while Spencer Lee only 164. So again, great stats, so you can compare yourself against other agents. Okay.
I'll tell you what I would like. I mean, it's this is a bit addictive. The to get into the detail of, just go back that one slide prior, and to speak to the businesses and understand what they did through that 12-month period, because I just think the first half of 2022, very different strategy, very different tactics. How do we launch a property? How do we price a property? How do we attract the right level of attention? How do we give it the right exposure? And then I think a whole load of agents decided in the summer of 2022, we're going to need to tweak what we do. And it's gone less about offers in excess of, or putting the property on at maybe 90% of its true value and off excess of to create that competition, and much more about a guide price and trying to bring people to the right price. And I think that in itself would have quite an impact on how this data presents. I mean, I could be completely wrong. Every agent in Brighton could have gone with a very standard asking price proposition. But yeah, it's I'm going to leave this with more questions than answers, which is bloody wonderful.
Good stuff. Right then. Okay, so this is the letting side, and it just shows you again, there's a big student market in Brighton, so that does screw the figures up. You can see November there, but I just think it's just nice to see what, for those that you're in Brighton, what is happening in the marketplace. Again, boys and girls, I must stress to you, we have not been paid to do this. It's just that we have access. I have access to the data and wish to share it with you. Okay, let us leave you with this one. So I'm just going to pop it on the screen on this.
Well, questions. So top 10 UK estate agents by total number of listings. I think, should there be a comma exchanged on? Is that what we're talking about?
Okay, so my English is okay. So
no. I just, because it could mean two things. I want to make sure I'm going to make points on the thing that my interpretation is. I think you're 100% correct. I just want to in use of language. So the top 10 UK estate agents are,
by total.
Tell me, are they brands?
These are companies, not brands. Okay.
Because
there are some estate agency companies that have multiple brands under their banner.
Okay.
Okay.
And for instance, is Fine & Country a company?
Yes.
Okay. So my argument there is that Fine & Country is a company made up of close to 200 businesses.
Yes.
So that distorts massively. And the likes of EXP, who are doing magnificent things at the moment, what are they? Are they a company?
Yes.
Okay, so the EXP would be in the top 10?
No, they're in the top 22.
Okay.
22.
Well remembered. Okay, so I don't think this is a massive surprise. That's my opening line on this. I think.
Go on. So basically, boys and girls, is this: the top 10 agents by total number of listings. If you put on 100 house, for every 100 houses that you listed, they would exchange contracts on 62. Those who are in the in terms of market share of listings, 11th to 50th, would exchange contracts on 63. Those who are 51st to 200th, for every 100 houses they put on the market, 69. And 201 to 1,000, 73.
So the top 50 are more or less in the same page. 62, 63 homes. The top 50 agents by number of listings, they're at 62 to 63% conversion rate. 51 to 200, they're at 69%, and 201st to 1,000, they're at 73%.
Yeah, and
Why I don't think
I haven't got it on the screen, but I went up to the 5,000th agent and it was hovering around 71, 72.
Okay, so I don't think this is a massive surprise because of business structure. I think the larger businesses, that the companies that generate masses and masses and masses of listings, because they have masses and masses of branches, or maybe teams of staff and salespeople and everything you'd expect in terms of infrastructure, all that hierarchy, all that volume, they can't maintain the same level of quality. And I don't mean any disrespect here to anyone. I started life in a corporate agent. The smaller businesses will be the ones that list less properties. A smaller business that lists less properties is more often than not got an owner operator or an equity director in the room, and the quality around the service delivery, and I think also the actual need for a smaller business to make every listing count, is far higher than a large corporate where things sort of get lost in the mix. I think this is
what is particularly interesting is this: out of those top 10, we have a massive range. So we have one agent at 79% and one down at 29%.
Oof. All right. Okay. I said this is you messaged me and said we're going to drop a bomb, and I said this is not a bomb. These numbers are average. What would be a bomb is if you produce those very specific. If you gave us a list, because that's astonishing. One in the top 10 at 79. I mean, that's a great stat. Are you able to call them out and say what a wonderful business they are?
I'm not going to at this stage. Okay,
that's a shame, because what a great business they must have to be listing at the top 10 listing in the country. And
all I know is this: they are much derided. I cannot mention the name at this stage. Okay, I cannot mention the name, but they are a much derided agency. There is the lower one is an agency that focuses on the south, like you said. I would expect that. And there is one agency in the top 10 who tend to focus on the upper quartile. They're at 50%, just over 50%. But again, the upper quartiles do tend to be at that sort of levels. But the normal run-of-mill standard corporate estate agents in that range are hovering around the late 50s, 60s.
Which I think that sort of makes sense when you look at a large company full of, to use EXP, who, I'm finding country, all agents are in essence in competition, but we're sort of working in different brackets. I've got huge respect for EXP, what they do. Some of their agents are absolutely amazing quality, but they're all independent, in essence, individual business owners, and so they've got skin in the game. They care that little bit more.
And what is particularly interesting, in the top 10, there is a franchise operation, and they have got some amazing figures. So they're in the top 10, and they're in this. They are in. We just have a quick look again. I'm not able to mention the name. That it's in the early 70s,
and so that sort of. It does two things to my argument. It supports it, and it also destroys it. It supports it in that if you have people with skin in the game, they're running their business, they're running it as their own, or it is actually their own business, 100% they're going to, I think, generate stronger results. Whereas I didn't consider that there'd be that many of them in the top 10, but it makes complete sense. A strong franchise operation, which will have exceptional infrastructure, fantastic support, and business owners who are going to drive service. I mean, I think that's a win-win for everyone. I'm not saying there's no place for corporates, because we've seen some astonishing growth from businesses, certainly in and around London, who are turning over significant volume. And would they be happy to sell?
And interestingly, there's agencies in London who you would put on a pedestal against each other, and one is performing twice as good as the other. In terms,
I think we won't talk names, and at the moment I would only be guessing, but there are some agents in London who, for instance, do like a very long contract, an agency contract, and they tie people in, and that tying people in process is in order to, I believe, I'm not naming any names, but I think it's high price, long-term contract, work them down, get the sale. and that's their process. And if that process works for them, I don't think it does masses for our industry and how we're perceived by the consumer, that we promise a high price, we lock people in. I don't think it's great for that, but commercially, are they probably happy with their business performance? I would imagine they are. So it's, you know, it's finding that balance.
We're not here to judge. We're just here to
Absolutely.
stats. Okay.
Absolutely.
And again, I'm not hiding anything. It's just that I've got to be very careful with the stats. And if anyone is that interested and wants to call me out, and if you want to come up to Grantham, I'll show you my computer screen. I'm not got nothing to hide. I just cannot. I just the line that I cannot cross with mentioning names on a national scale. I think we're about there. So thank you for your time today. Ben, you've been an absolute star. Thank you for your insight. We look forward to you getting you back in a month or so's time with your fascinating insight. Next week, I don't know who's going to be the guest star. I've got a few people lined up, and we'll just find out whose diary allows. But Ben, you've been an absolute star. Thank you very, very much for your time today. And more importantly, thank you for watching, boys and girls. In this, there'll be a link on the YouTube channel where you can download all these slides. I just ask that please, if you do want to use the slides, send me an email to christopher@christopherwatkin.co.uk to ask permission for them, because I just need to that's only fair, isn't it? But there you go. Thank you for your time today, and we'll see you next week with the next show. Thank you very much. Thanks, Ben.